Welcome back to the YouTube channel of Old Bloke Crypto on February the 8th, 2024. And we have an interesting chart before us, as I was discussing yesterday on the YouTube video. If we see the chart pattern that we are seeing now, it's indicative that we're likely to break out of this channel, or this range, I should say, in the next 24 hours. Let's see why. We've closed the whole of yesterday's candle. It's an hour and a half into the new day so far. We've closed it above the top of the range for the first time in a little while. You see, we've had these attempts here. This is a previous attempt and come back into the range. And this was a response to the fake out. We came well back into the range. We've closed above the range and we are now sitting above the range on today's candle. What we need to see is for this candle to open and close above the range. If it does, I will be adding another 5 ETH to my high time frame long. And why am I doing so? I'll give you the reasoning behind that in a minute. One of the reasons is this fake out that we had, which was a substantial fake out, hitting the all-time high of 27.20. It's rare in a charting pattern like this, where we've been in a range for quite a period of time, for a fake out to be quickly followed by another fake out to the same side. So again, if it was to the bottom, for a fake out to the bottom to be quickly followed by another one, it is rare in these situations when you are trading in a range for an extended period of time. That's one example. But of course, that's from the history. We're looking at the data. So as I said, that's my primary indicator here that I'm using. There's more to come, that the open and close must be above the top of the range. This is a secondary one. It's just a nice little confluence. But as I said today on Twitter, are we looking at a breakout or a fake out? And that's legitimate, because that was a substantial fake out that we saw recently, and it spooked people. Because if you see this one here, if you see this here, it is something that often you'll get a fake out, which would just be a couple of days, 2 or 3 days, and then back into the range. This went on for many days before it came back in. And a lot of people got caught out of position as a result. So there's a bit of spookiness in the market, understandable. Now let's look at this leads me on to my next point, and that is the liquidations. As you can see, people taking profit here. These large size 3 liquidation bubbles are where people have essentially closed out their position, and they've liquidated their positions and taken profit. So that was when we're getting up to the top of the range here. And people have done so. So there is a substantial number of people that have taken that profit, and it'll lead into other liquidity charts in a minute. However, what we're seeing here with these small green bubbles here is that they are indicating that there's more positions coming into the market there. And we'll also see that shortly. And our parabolic support and resistance is also indicating by its shape here that there is more liquidity coming into the market. There's more support. You'll see a similar shape here, and you see the price action similar. So we've broken through the old liquidity bands that I was talking about a couple of days ago. We've taken those out. People have taken profits up here, but there's more people coming into the market. Are they retail or are they institution? Let's have a look. Now, as I said, there's a lot of retailers that have been scared by that previous fake out. Could be happening again. And a classic example here is on the 1-day chart. Now you'll see here, and I've just refreshed this recently, I'll do so again. You'll see this big gap to the downside here. That is obvious. Now, when there is a rapid price movement to the upside, like we've just seen in the last 24 hours, a lot of the time the retail longs will rush in right behind this price action and fill in this gap. They haven't done so yet. There is still plenty of liquidity to the downside, don't get me wrong, but this is a classic example of nervous retail traders not filling a gap that appears in the liquidity. You'll see here, we could still go to the downside, and this gap could get filled very rapidly, but it's indicative that the retail traders are being a little bit nervous. If price continues today and we continue on strongly, especially in the US session, because let's be honest, the Asian and UK sessions have been doing next to nothing for the last few weeks. It's basically been non-existent, really. And so we're just looking at the US markets. The US market continues on strongly up here. Tonight, Australian time, you're expecting more retail longs to come in there, and we'll check that again tomorrow. Now, let's have a look at the 7-day chart here for liquidity. And you'll see here, there is still plenty of liquidations to the downside. There's plenty of long positions that are in the market, and yes, they could potentially get tagged. And you'll see again, pretty much a gap back in here, down to the first significant wick of around the 2400 mark. In the grand scheme of things, it's not a particularly big wick, but it does a big gap, I should say, to the first wick. Now, it could easily get closed. We might see that before the US session, but in the US session, as I said, I'm expecting continuation. Now, the caveat to that is let's have a look at the ETH BTC chart. Now, Bitcoin is trading up. I know that. Have a look at the Bitcoin Ethereum chart, or the Ethereum Bitcoin chart, I should say, as it's appearing here. And you can see that from yesterday, even though we had a strong green candle, it's still coming down here in comparison to Bitcoin. So that's something to note. It's not as strong as we would like it. And so we're not expecting a massive breakout in the next couple of days against BTC. We're expecting a breakout against USD. But it's something to take note of. And it's also, perversely, it's encouraging, because if this stays around this level for the time being while Bitcoin is going up and dragging the entire market up, then there is a lot more room for expansion for Ethereum to the upside in time to come, like we saw here on these other massive green candles here. So I'm not too worried about that, but it's indicative that ETH is not really doing much on its own. It's relying a lot on BTC. And of course, BTC, we look at its chart, it's the strongest of all. And you can see here, again, yesterday's strong green candle. So it's pulling the whole market up. And as the saying goes, a rising tide lifts all boats, and certainly lifting Ethereum. And it's stronger, not only in the ETH BTC pair, but it's, as we just saw in the previous chart, but here you can see that the EMAs are starting to spread to the upside. It's not something to hang your hat on for sure, but it's nice to see. And it's also indicative of where Bitcoin is and how it's pulling up the entire market. I haven't marked the channel boundaries here on Bitcoin, but they still exist just like Ethereum, and it is just broken out to the upside as of yesterday, just like Ethereum. So getting back to the Ethereum chart, as I said, if we continue on to the upside today, I'll be adding to my long position. But if we come back in and we show weakness today and we come back to close below this top of the range, I will be sitting on my hands and waiting for further development. So the next 24 hours are indicative of where we're going. We can either add to our high time frame long or do nothing, depending on the price action. So there are our two scenarios. So I won't be adding to any short position, my short hedge at the moment. I'll have to wait for the ensuing days to see if we do come back down into the range. So anyway, that's where we're at the moment. Interesting 24 hours. Let's hope for a nice big green candle to finish off the day in about 22.5 hours. This is Old Bloke Crypto. I will be back on YouTube again tomorrow. Stay safe with your trading. Talk to you there.